I think the Fed's winning, man. I think the chance of a soft landing. I think there's no more Fed rate increases. For the longest time, you've told us to watch the unemployment rate when that
Oh yeah,
spikes.
I thought you would bring that one up. Yeah,
See, I'm paying attention to you.
I think CPI is going to come down slightly, maybe
Okay.
3.1,
Okay.
but it's going to be really hard from this point on.
I don't know about you, but I need to know what happened to the stock market last week. Love to talk about what's happening next week. We did get the jobs number on Friday, which was, I don't know, exceeded expectations, but you also had to subtract 100K. So kind of
Goldilocks.
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 I think the Fed's winning, man. I think the chance of a soft landing. I think there's no more Fed rate increases. Lots of people disagree with me, and that's okay. But Dan, you're here. What happened last week? Where are we set up for this week? We're in September, which is a scary month historically. What do you
It
got?
is. It is, and I, in general, agree with you this week.
Wow,
I
that people watch our
think
channel. We don't really agree, so I'm shocked.
I think the Fed might be done as well. The next big question is when will they start cutting?
Yes. And I think on that, I'm going to stick with my no cut till 25. It'll be the longest time they have held, which I think will be over 18 or 19 months before they cut the
Yes,
first time.
right. It will be the longest.
Yep.
Although Powell threatened that back in 2018 too.
Yeah, no, again, I realize I'm standing on an island. I realize that Jerome Powell's track record is not great. I do realize there's some nasty black swans that could come, and it's okay. I am comfortable being wrong, and we'll see.
Yeah, anything can happen, really. But I mean, yeah, I have to give it to Powell. I think so far he's actually done a pretty good job.
Yeah, he
He's
started
had
late. He started late. Let's not. But
started too late. I agree with that. I've talked about that on this channel before. He started about 6 months too late,
mhm.
and it was pretty clear when he should have started.
Oh yeah,
So,
yeah.
but having said that, a lot of people think he might have gone too far already, but there aren't really any signs of that
No,
yet.
I mean, we did get. I thought there was one thing that I saw on Friday that I'm like, ooh, I got to ask Dan about that because for the longest time you've told us to watch the unemployment rate when that
Oh yeah,
spikes.
I thought you would bring that one up. Yeah,
See, I'm paying attention to you.
yeah,
So we had the unemployment rate spike from 3.5 to 3.8, even though we added jobs. So a lot of
yes,
people be like, how the hell did that happen? It's called the participation rate. And
that's right,
again, the Fed's winning. The Fed wants to pull people off the sidelines to fill
right,
those damn job openings that are,
right.
1.5 to 1. So again, the Fed's winning, man.
Yeah, for the longest time, people didn't really want to work, and if they did, they didn't have any problem finding a job.
Right.
And there was an interesting comment that I think I heard on CNBC on Friday. I like watching CNBC for the jobs number because I love seeing what the predictions are going to be and what actually happens.
Yeah.
One of the comments was, it's up until now, it's been if you leave your job, you already have another job before you finish packing your box,
Yeah, exactly.
right?
Mhm.
But that is slowly beginning to change, I think. So people are coming off the sidelines.
Yeah.
Now, that we'll talk about that 3.8 unemployment rate. And in the past, I've said, watch if it spikes by 0.5% in 1 month. I'll modify that a little bit. If it goes up by 0.5% in 2 or 3 months at the outside,
Ooh.
I mean, that means it's spiking. It's continuing to go higher. So if it goes to 3.8 and then drops back to 3.6 or 3.7, that's not going to mean too much. But if it goes to 3.8 and then it goes to 4 and then it goes to 4.2, that's a problem.
Okay. All right. Yeah, and again, we got the participation rate back to 2019 levels, which was significant. We hadn't been there in, I don't know, 3 years.
Right.
So we will see where it goes next. Yeah, it was pretty interesting. So what happened in the market last week? What happened?
Well, the market actually handled things pretty well. I think they actually liked what they heard. In general, we had a little bit of a rally. I'd call it a short covering rally more than anything else, and I'll tell you why here in a second.
Okay.
Let me share. Okay, share my screen. For those that are interested in getting my newsletter,
Mm-hmm.
my newsletter now is exclusively on my website. So I don't send it via email any longer. So just go to breakpointtrading.net and you can sign up, register your email. I will mention, I had a couple of people send me, and I spent a lot of time with one particular guy because I really wanted to get to the bottom of it. He said, I registered on your site, but I can't get the email. Every time I click on it, I get something that comes up that wants me to sign up for a plan, for a subscription. Mm-hmm. So we did a Zoom call and I actually watched what he did. And he was leaving out one last little step that really wasn't very clear. And I hope that I've cleared that up because I've changed some of the forms that come up when you first log in. Mm-hmm. But you have to take that one extra step. It's not just a matter of subscribe or logging into the site. Mm-hmm. And entering your email. You have to actually subscribe to the free newsletter. So that is a subscription. It's free, and there's no credit card. We don't ask for a credit card or anything like that. Mm-hmm. But it is actually a subscription.
Right. Gives you permission to get it. Yeah.
Yeah. So if you don't take that one final step, even though the whole thing's free, you can get to the website, but you can't get to the newsletter.
Okay.
So if people have that problem, if they're clicking on, they're like, I signed up, but I keep getting this thing asking me to subscribe. Well, go ahead and subscribe, but subscribe to the $0 free newsletter.
Exactly. Okay.
And then you will then you can just click on it and it will come up automatically.
Perfect.
So just let people know that. So these are a couple of the cartoons I had this week. So here's Goldilocks. That's what the jobs number.
Yep.
Right. Mm-hmm. It's looking at anemic GDP, housing slowdown, social media bubble. Says, yuck, none of these are good. And then I love the AI.
You're in my seat.
The AI cartoons I had this week. I'll have to show you those because you didn't get to the newsletter this week, but no. Got some pretty funny ones. Okay. So anyway, breakpointtrading.net. That's where you can go. I'm going to be using that from now on in our calls. This is what the front page looks like.
Yep.
You don't need to subscribe to get to this. Anybody can log into this. I did put the IBD status up here now, right on the front page.
Ooh, market confirmed uptrend.
Right.
Okay.
Confirmed uptrend. NASDAQ and S&P follow-throughs, confirmed rally attempt, raise exposure 20 to 40%. So that's from
Did you see that I think his name's Tom Lee from Fundstrat, talking about record highs for the year at S&P, just like you?
Yeah. I've been saying that since last year.
Yeah, I know you have. I gave you credit, the Daily Financial News, about a week ago. I'm like, our boy Dan Bird's been saying this.
Right. Yeah. I mean, they're talking about 5,400 on the S&P.
Oh, my God. 54? Oh, my God.
5,400 next year.
Wow. Okay.
By the way, on this front page too, if people haven't figured it out yet, there are links over here for each of these: S&P, NASDAQ, Dow, Bitcoin, and the US dollar.
Oh, cool.
And you don't need a subscription for this. You don't need to subscribe even to stock charts. These will come up anyway. Although with stock charts, you'll get a lot of ads as well if you're not a subscriber, but the chart will come up. So if you remember last week, we had this little thing over here called a right shoulder.
You remember?
For the head and shoulders. And I said, if that does not complete, then I will remove that head and shoulders pattern.
Yep.
Well, it did not complete. It's actually broken through it and heading higher.
Wow. Okay.
So this support is still valid down here. So we still want to watch that. But there's not really a head and shoulders any longer on that. Okay. And on the S&P, kind of the same thing. The S&P, I think, is going to bounce around between these two levels, 4,300 and 4,600.
Okay.
Probably till end of October, till we really start to rally into the end of the year.
Got it.
But right now, it looks pretty healthy. It's heading higher. All right. So the other thing on the front page is this secular bull market. I will always keep this here, and I will update it every week.
Okay.
We are still in a secular bull market, and you will know when we're starting to transition to a secular bear market when one of these turns red.
Right.
Which none of them right now are close to turning red.
Could you also pull up the 10-year? Because the 10-year did not act like I thought it would on Friday, right? It got a
Yeah,
ho hum number and then it ripped.
right. Yeah, that was interesting. And
We'll see. We'll see if there's follow through Monday or Tuesday. But
so here's the 10-year actually was up much higher than that.
yeah, yeah, yeah.
But the 10-year came down, you'll notice right down to this support level, which was the high from back in March.
Mm-hmm.
And it actually hit it here and got rejected and then went through it. But it came back and hit that same support level almost exactly,
Hmm.
and then started to go higher again. So the 10-year, I think, first of all, the market has become accustomed to the high rates.
Sure.
So the market's going to continue to go higher. In fact, I submit, and I've said this before, the market will go higher even if rates go higher. And if it stabilizes and the Fed stops, then that's going to be encouragement for the market to go higher. But the
Yeah,
market will,
that's one thing I think the Fed, like you and I earlier agreed that the Fed's done. They will
right.
never say they're done though, because they don't want
No,
the market to rip.
no, they won't. But I don't think the rates at this point, I mean, the September meeting might be the final one where this could be true. So if
Oh yeah,
the Fed does raise, then, I still don't think it's going to damage the market much. I don't think they're going to raise, but
no, I think that
I think,
I think the market's actually under 50% now. I think after Friday's Goldilocks jobs number, I think it's like 38% or something. I need to go back and double check, but I think the
yeah,
odds of a September rate hike are low.
I don't think the Fed rate or the 10-year Treasury rate at this point is going to make
Well,
any difference to the market.
I know it's a week out, but it's a light week for economic data. We got CPI the following week. I think CPI headline last time was 3.3.
Yeah.
Oil is at a 52-week high, I believe. Gas is
Yes.
up.
Yeah.
What are the other commodities doing? I
We can
haven't
look at
looked.
that actually. We can talk about that again next week as well,
Oh yeah, yeah, of course.
because that'll be just before the CPI number. So here's CPI headline with core. You can see right there headline. It actually was 3.2, but if you'll notice over here, this is what I said before. It was actually 3.3,
Hmm.
but on the BLS site, they were still saying 3.2.
Yeah, weird.
But if you look at the actual number, if you calculate the actual number,
Hmm.
and this is just math over here,
Right.
it's 3.3.
Hmm.
So that they had that number wrong.
Yeah. Okay.
I think CPI is going to come down slightly, maybe
Okay.
3.1,
Okay.
but it's going to be really hard from this point on for it to come down
Yeah,
much.
I'm going to be watching core because I think core because again it's X food and energy. Core should have its first month of housing I don't know, goodness or whatever you want to call it. We get a big
Right.
number rolling off. So I'm thinking core might go down like point 0.3, point 0.4 maybe.
Yeah. Yeah, it could. Commodities are still heading higher.
Yeah, let's look at that. Okay. Oil,
So
yeah, gas.
CRB,
Well,
oil, gasoline,
hmm,
they started spiking up in July, and then in August they pulled back a little bit,
hmm.
but now they're starting to head back up again. The
Okay.
CRB number is actually higher than it was at the end
Yeah.
of July.
Okay.
Oil and gas are still lower than they were, but they're heading back up again.
Hmm.
But my point was that I was going to make is I don't think Fed rate hikes or the 10-year Treasury matter to the market any longer.
Wow. That's a bold statement.
I think the market has gotten used to it. I think the market will continue to go higher. I'll show you this other chart here. Fed rate hikes and recessions. I put a chart in from another site that was similar to this, but it didn't actually show the recessions. So, and what they were saying is, be careful about wishing for a rate cut.
Yeah. Be
Because
careful what you wish for. Yep.
that's one of my three criteria for a recession. So you can see here, and this kind of shows what you were saying as well. You can see how long the Fed stayed flat.
Yeah, calling an 18-month Fed pause is
Yeah.
frankly stupid on my part, but I'm going
Well,
to call it anyway.
this goes back 33 years, and we've got this one here just before the .com crash, which was about 6 months.
Yeah, there's I think 12 months or maybe it was 13 months is the longest on record.
This one here is 12
Yeah.
before the financial crisis.
Yep.
And this one down here was 6 months
Mm-hmm.
before the COVID crash. And by the way, before the COVID crash,
Mm-hmm.
before anyone even knew about COVID,
Yep.
the Fed started cutting. So these pink arrows right here are the first cut, the first rate cut.
Got it.
All right, first rate cut here, the market went down, and 2 months later we had a recession. First cut here, this was COVID, so what didn't take this was not a very long one, but the market eventually went down. We had a recession. First rate cut here was the .com crash. After a very prolonged, these green and red down here are my secular bull and bears.
Yep.
All right, so this is the secular bear down here. We had 2 recessions. This is a secular bull over here. We had 1 recession, 1990. Didn't last very long. But notice what happened during this big run in this secular bull market. Fed cut rates right here, market kept going higher. Fed raised rates here, market dropped a little bit, then went higher.
Yep.
Fed first raised, these blue lines are the first hike, first rate hike. Market dropped and then went higher. First rate hike here, market dropped, then went higher. So that's what happens when you have hikes. Here's this blue one here, market drops, then goes higher. The market gets used to it.
Yeah.
The market gets accustomed to rate hikes. We had a big drop right here in this bear market. And then even as the rate hikes continued, the market went higher.
Yeah.
So be careful of the first cut.
Okay.
That's what I'm saying.
I like it.
In fact, I think the title of the article that I read was Buy on the Hikes and Sell on the Cuts.
Which is kind of counterintuitive.
Counterintuitive, but if you'll look at this, the cuts happen just before a recession.
I got you.
So if that's the case, then the market, and the market it knows that we're going into a recession, then it's going to start going down. This is the inverted yield curve. Still has not coming. This is one of my 3. So these are the 3 things. I put this in the newsletter this week as well. My 3 things that I look for a recession. Number 1, Fed starts cutting rates. Number 2, the yield curve goes back above 0. We're still a long way from that.
Yep.
Number 3, unemployment rate spikes by 0.5% or more. And I would say within 2 to 3 months.
I like it.
All right. So we just had a 0.3% spike. If that continues going higher, then that's a warning sign. But back to our original conversation about the Fed and whether the Fed is going to keep rates steady for 18 months. Remember, the Fed has 2 mandates.
Yep.
They're working on one of them now, which is keeping prices stable. Okay. If they get, and another thing that I read, which was interesting, I haven't confirmed this yet, but something I read said, historically, the average Fed rate is 3.3%, or the average inflation is 3.3%, even though the Fed wants to be to 2%. But the historic average is 3.3.
Okay.
So you can make a case we're already there, but that doesn't mean we're going to stay there.
Right.
That hasn't been proven yet that we can stay there. So that's one of their mandates: stable prices. Right. They are nearly there for that.
Well, I think they're closer than most people think, because again, I've been preaching this for 9 months, mathematical certainty that housing gets better from here for the next 3 to 4 months. Housing is 43% of CPI. So even though that oil is up, and I think oil is 8 to 11% of CPI,
Right.
housing is 43, and
Right.
it's going to roll over next month.
Right.
So it's going to get interesting.
Yeah. And the Fed knows that.
I hope so.
It's not like, it's not, believe me,
The math's
if
not
you
foreign.
know
Yeah.
it, if you
Yeah.
know it, they know it.
Of course, of course. I was
So
being
it's
cute.
not like this is going to come as a big surprise to them.
No, I agree. It shouldn't. No.
Another reason why they probably won't cut. I mean, won't raise in
Yeah.
September.
Yeah, I
But
think let's talk about CPI one more time, and we'll do this again next weekend. I think core has a good chance of coming down meaningfully, and I think even if headline is flat, the Fed's winning,
yeah,
right? Because
yes,
core is the problem, right? Core is actually above headline. So if core
if
comes down, let's say to 4.3, and headline is just flat, I think it's a win.
yes, it is.
Okay.
I don't think it will be flat though,
I was just
because
using it as a
no, I know,
example.
but if you'll notice the little one here that's going to drop off,
Mm-hmm.
it's actually higher than the previous month's number.
Okay.
So last month we went down,
Yeah.
on a 12-month basis, we went down. This next month, it's going to go up. In other words, what that means is this is the one that will drop off.
Right. The base effect will drop off. Yeah.
Right. So this gap up right here will drop off and go away. Last month was a negative that dropped off, which is
Right.
what caused it to go from 3 to 3.3.
Mm-hmm.
So this next one is actually higher than the 2 months ago.
Okay.
That's why I say it will go down. It won't be flat. It will go down, but probably won't go back to 3.
Okay.
I think it might go to 3.1 or something like that.
Okay.
The next ones, and if you look at these, I mean, there's a fairly big one.
Yeah. The next couple are big. Yeah.
The next two, there's fairly big ones, but then there's pretty small ones till we get another big one here. So the hard work, I mean, the easy work's done. The hard work is now starting. So it's going to just bounce around, I think.
Yeah. We could
Between
be sub
3.
3%. I think we could be sub 3. So this would be in September. So it'll probably be a November report. Those two big ones fall off. We could be below 3.
Yes.
Headline.
Yes. Yes. Yep. That's right. That's right. And core, you're right. If core drops to 4.3, it's going to be a huge drop right there for core.
Yeah. Okay.
But to finish my thought that I had started this whole conversation with at the very beginning, the Fed has 2 mandates. So we talked about one of them, which I think the Fed has completed, has accomplished, but it's not proven that they've accomplished it yet.
Okay.
Which is stabilized prices. The other mandate is employment.
Yep.
So if the unemployment rate continues to rise, now I would submit that that's probably a good thing this time because it means more participation. But if if the jobs actually start to drop off too at the same time, then the Fed is going to have to stop thinking about stabilized prices. And this could be 4, 5, 6 months out.
Correct.
The Fed will have to stop thinking about their first mandate and start thinking about their second mandate.
Yeah, I'll say it this way. If the Fed could get job additions like last month and and unemployment goes up, they're happy. They're happy.
Yes, they are. And if they can get CPI or inflation to slowly come down,
win-win.
And they can get more jobs, plus 100,000, but plus 150 is a win, even if the unemployment rate goes up.
Right.
But if the jobs number starts to come down too,
correct,
and that could be 6 months before that happens.
True.
But if that starts to happen, they will pivot away from price stabilization and inflation, and they will start focusing on employment. Mm-hmm. And when that happens, they'll start cutting.
Well, in this environment, they may.
That's why I say there will be a cut next year. That's why I think there'll be a cut next year.
And the reason I don't think they're going to be a cut is because they have other tools. I think they will stop quantitative tightening first before they cut.
That could be. Yeah.
That's the first thing they're going to do.
Yeah, that could be. Interestingly, that you say that. Here's an image that I did not put in the newsletter, but I was thinking I might do it next week.
There you
Here's
go.
the amount of money in circulation. This is quantitative easing.
Mm-hmm.
The quantitative tightening, hopefully, what their goal is to reverse this.
Yeah, they were taking money out of circulation. Yeah.
Right. January 2020, just before COVID, 4 trillion. January 2021, 7 trillion. So we've gone up by 5 times in 2 years, two and a half years.
Yeah, that's crazy.
Almost 3 years. 5 times. So quantitative tightening needs to happen.
Agreed. That's why they'll stop that first if
Right.
jobs become a problem.
Yeah. I don't disagree with that.
Yeah.
So what else was I going to show here?
Well, I think this is a good setup for the next one, which is going to be what to buy, when to buy, and where to put your stops. I can't wait to talk about that because you're teasing me. What is your website one more time so people can get it?
Yeah, that one is a little project that I just started working on this week. Just go to breakpointtrading.net and register your email, and do not forget to subscribe to the $0 free newsletter that does not ask you for a credit card, but you have to actually take that step. You got to push the button to subscribe in order to get the newsletter.
There you go, man. I appreciate you. Thank you.
Oh, hey, by the way, I know one thing I wanted to show you.
Sure.
Before we go off of this session, I wanted to show you my other 2 cartoons.
Okay. All right.
So this is my website. At the very top, it says click here for a current week's newsletter. That's on every page. So you can just click on that and you'll see this PDF right here.
Yep.
Just click the PDF and it'll bring up the newsletter. And those are the 2 that I showed just now. Check these out.
Not a robot. Discrimination. Okay. It's funny.
So my question is, would the robot know to check the box?
I don't know. That's a good question. I don't know.
And here's a really good one.
Gosh. A little dark.
A little dark, yeah.
All right. Well,
that's the future. Go. That's the future.
Not a future that I want.
So breakpointtrading.net.
There you go. Thanks, buddy.